Hey guys, welcome back to the channel. Today I'm going to be providing a market analysis update on Theta, going on the weekly, some very important key support level and resistance levels, as well as my general thoughts on what to expect going into the next few months as to where Theta could potentially be headed. So if you're new to the channel and you enjoy the content, please do consider leaving a like and subscribing. So if you've been following my Theta analysis videos, I really do like the weekly here with these moving averages, the 21 EMA, the green line, and then 20 SMA, the red line. Together they form this band, and it's done a really good job at identifying the bull and the bear phases. So when we're in this uptrending environment, this bull market, we can expect in the event of a correction, we can hold these as support and bounce off of them and then continue higher. So we've done that in a bull market, and then basically when we're starting to shift gears and the trend is shifting from bull into neutral, what we do is we go sideways, oscillating between these moving averages, and then when we're ready to go into a bear market, we come down below, flip it into resistance, reject off of it, and then continue lower. So that's what we've been doing. We had this very key rejection back in December, and then another rejection here in April. So there's really two key scenarios in my mind as to what to expect going into the next few months with these moving averages. Now, keep in mind, 20 weeks ago we were at closing prices, around $2 at this higher region. So these are going to be continuously moving down at this pretty quick rate of change, where it's going down by about 7 cents per week. So if we're starting to come up and retest these, there's two key scenarios in my mind. One of them being a rejection and a continuation of the current trend in play. The other being we're starting to shift gears, form a base, consolidate above and below these, and then transition into a larger bull market. So first, let's go over the second scenario in which we have a trend reversal in play and we're starting to shift gears here. So what that would look like is, again, these moving averages are going to continuously move down, something like this, and then round off. If we're starting to transition here into a neutral phase where we're no longer in this bear market, what we would expect is just in general an oscillation above and below these moving averages. And then eventually, when the time is right, when the bull market is really ready to kick off and we're going back into that bullish territory, we would expect these moving averages to slope back upwards, and then we would hold them as support. So something like this, similar to, if I go all the way back here just as a case study, that's essentially what we did at this base, right? In 2019, we oscillated back and forth, above and below, and then when the time was right, we came above them, came back, retested as support, continued higher, retested as support. So this is the trend in general, just the pattern of what to expect if we're starting to transition into a bullish environment. Now, obviously, this doesn't have to happen today, and really, if we just take a measured move going back to 2019, we can see this oscillation period above and below the 20-week moving average lasted about 63 weeks. And if we're starting to say, okay, well, we've got a bottom in play and we're going to begin that consolidation period, we're only, about 10 weeks in. So if we were to go 63 weeks out, which I think this is a little bit nuanced, there's obviously no chance that it plays out exactly similar to 2019. But if we were just to do that for speculation and for fun, that would take us all the way to July of 2023. So don't expect new all-time highs next month, because we might have a bottom in play. Obviously, that doesn't have to happen. We would need to see several months of consolidation if this scenario plays out. Now, the next scenario is that we just continue the trend. And so the current trend in place is we have this support region defined. If I just take a trend line here, the first support region was around $3.70. So what we did was we came down, retested the support, came back up to these moving averages, rejected, and then formed lower lows. And then we formed this new support level. So this next support level was around $2.50. Okay, and then we had support being held for a few weeks. We come up, we reject off of it, and then we form lower lows into this new support level, right? So it's a continuation of this trend if we are to expect a rejection, right? So what that would look like is these are going to continuously move down yet again. If we're going to be playing out scenario number 2, we're going to come up, reject, and then form lower lows into the next support region. Now, if this scenario plays out, if you see a rejection off these moving averages and then a breakdown of the support level, the next area down that I'm really starting to eye and potentially consider a macro bottom to be in play is this 58 all the way to 78 cent region. Now, if we go back, obviously this was a very large consolidation period in 2020. We had this macro bull phase, and then this is where we paused. We consolidated for 12 weeks, right? So this is a very key level that's kind of calling to me in the event that we're rejecting, playing out scenario number 2, and then retesting these lows and then forming lower lows. We can also see this was a rejection point back in May of 2020. This was a pretty significant rejection point, dropping 67% really from this wick. I don't know how accurate this wick is, but in general, this is a consolidation phase that we held back in the later 2020 phase. And then following this, we just pumped incredibly, just following the few weeks after this consolidation phase, we went up 260% in 2 weeks. And this is a pretty big point I want to make. When you go up 260% in just 2 weeks, you're not forming any support levels, right? You're not consolidating. You're not forming any market structure. You're just going straight up. 260% in 2 weeks is just going straight up. And the fact that we're consolidating here, it's not historically been a strong level. We probably only spent 1 or 2 days at this 97, 98 cent region in all of Theta's history, right? If we just extend this out, this trend line, this support level, we didn't stay here. We didn't consolidate here. We didn't form this as a key level. We just went straight through it, like a knife through butter, right? So if we're starting to come back down, retest these support levels, and then form lower lows, a continuation of the downtrend in play, this is the next scenario. This is the next region that I'm expecting a potential bottom. So, obviously we could have the rejection and then we could get the consolidation phase. And I think this is probably the most likely scenario in my mind. Again, it's all about probabilities and what I would expect if we're doing this. Again, these moving averages coming back down, and then in general, this is the base we form, ultimately just consolidating, oscillating above and below. Now, I have it a little bit, drawn a little bit weird, but this is just the general trend. This is what we want to expect. We want to expect a shift, a transition from this bearish downtrend into this neutral sideways trend back into the upwards trend, right? So again, it's similar to the phase in 2019 where we just went back and forth. And I don't know how long that could take. The real key sign is when we get above them, come back down, retest that as support, and then continue higher. So that would be eventually when we're starting to hold these as support, bounce off of them. And I don't know when that will be, but it will be pretty obvious from a weekly time frame, expecting that, if it could even be today where we have potentially a scenario playing out where we have a shorter consolidation phase. And now I do want to quick disclaimer, I don't think this is going to be playing out. I think this is probably the least likely scenario. But if we're consolidating for just a few more weeks and then we come up and then hold this as support and then trend higher, this would be really the bullish scenario that, in the event Bitcoin's reclaiming $30,000, everything's back to a bullish environment. I don't think this is going to play out, but again, just a similar trend where we can identify the shift from consolidation, oscillating above and below them, into holding it as support. And that's really the key, because what we do when we're holding it as support is we get these short-term corrections, right? We have these dips in a bull market that are taking us down, 30%, and then we can bounce off these moving averages and continue higher. And the moving averages are upward sloping. So the support is rising, and then it continues rising at a quicker and quicker pace until we form this mania blowoff phase, and then we consolidate and then flip it into resistance. So in general, that's my long-term market analysis on Theta. I hope you guys did enjoy. If you have any comments, suggestions, or feedback, please do leave those below. And as always, I will see you in the next one.